In recent years, DigiPlus Interactive Corporation has become one of the most talked about gaming stocks in the Philippines. Once a small-cap operator of online bingo and sports betting platforms, it saw a meteoric rise. In 2023, it was the best-performing stock on the Philippine Stock Exchange. However, in mid-2025, the stock underwent a major sell-off. Fears of a regulatory crackdown on online gambling triggered around 70% plunge from its peak, erasing over 200 billion pesos in market value in a few weeks. In this video, we'll break down everything you need to know: what DigiPlus does, its recent financial performance, and its key growth plans: Brazil, South Africa, a potential city of dreams acquisition. We'll analyze its valuation and compare it to peers, especially Bloomberry Resorts, review investor sentiment after the sell-off, and discuss the risks and catalysts ahead. Our goal is to give retail investors an in-depth but clear picture of DigiPlus's story today. DigiPlus Interactive Corporation, formerly Leisure and Resorts World Corporation, pioneered digital gaming in the Philippines. It operates leading online platforms Bingo Plus, live streaming bingo, and Arena Plus, digital sports betting, as well as new products like Spin Plus and Game Zone. These apps let Filipinos wager on bingo, casino-style games, and sports events via smartphones and PCs. Under Chairman Eusebio Tanco, a port and education tycoon, the company aggressively refocused on these platforms after securing key packer licenses. For example, DigiPlus shares have surged around 1,700% since it received its online bingo license in 2022. By emphasizing digital entertainment rather than traditional casinos, DigiPlus carved out a high-growth niche. In fact, it outperformed nearly 300 other PSE-listed companies by stock gain in 2023. This reflects a business model centered on attracting a mass market of gamers across the Philippines. As its platforms gained users, revenues and profits exploded. Meanwhile, the company has leveraged its success to expand. It now operates subsidiary brands for Brazil and is planning entry into Africa, South Africa. DigiPlus's financial results have been exceptionally strong until recently. In the first 9 months of 2023, revenue nearly tripled to about 16.0 billion pesos, from 5.6 billion pesos a year earlier, and EBITDA jumped 390% to 2.5 billion pesos. In the months of 2024, the company reported an even more striking 314% jump in net profit to 8.75 billion pesos, compared to the prior year. These surges were driven by booming user activity on Bingo Plus and Arena Plus, plus new game offerings and heavy marketing. The strong trends continued into 2025. For the first half of 2025, DigiPlus reported 8.4 billion pesos in net income, a 61% increase year over year. Revenue rose 47% to 47.78 billion pesos in first half 2025 versus 32.56 billion pesos in first half 2024. EBITDA reached 9.09 billion pesos, plus 65% year-on-year during that period. On a quarterly basis, Q2 2025 net income was 4.20 billion, up 30%, on revenues of 24.71 billion pesos, up 31%, and EBITDA 4.50 billion pesos, up 32%. These results reflect continued growth in its core retail games and newly approved licenses. Notably, DigiPlus paid 18.4 billion pesos in taxes and fees in first half 2025, underscoring both its earnings power and its importance to government gaming revenues. In short, DigiPlus was on a tear. Revenues and profits were accelerating, boosting its market capitalization to over 120 billion pesos by late 2024. For context, that made it larger than Bloomberry Resorts, the big casino operator at the time. The company also earned external recognition, included on the Fortune 500 Southeast Asia list and named Digital Operator of the Year in Asia Pacific Gaming Awards, which highlights its growth trajectory. Brazil market. DigiPlus is already executing on its planned launch in Brazil. In December 2024, the company announced it had fulfilled all requirements for a Brazilian federal gaming license, including paying the hefty license fee, around 660 million pesos. Once approved, DigiPlus will be allowed to offer its platforms, Bingo Plus, Arena Plus, etc., in Brazil's huge market. Indeed, DigiPlus expects to begin operating there as early as late 2025. Brazil has over 200 million people and a strong appetite for gaming. Analysts say it could sustain DigiPlus's growth momentum. The company is planning both online and physical betting, sportsbooks, live casino studios, electronic games, etc., in Brazil, which is estimated to be a multi-billion-dollar market. Chairman Tanco even called Brazil a huge gaming market and a priority in its international strategy. In sum, Brazil is the first pillar of DigiPlus's overseas expansion, a massive addressable market where the company has already invested license fees and is now awaiting final regulatory approvals, expected by early 2025. South Africa or Africa expansion. The next step in DigiPlus's global push is entry into Africa, starting with South Africa. In July 2025, the company confirmed it is applying for Western Cape gambling licenses, aiming to participate in that jurisdiction's online betting market. DigiPlus plans to obtain multiple licenses, national manufacturer, bookmaker premises, and set up a local entity in compliance with South African rules. South Africa is the continent's most mature online gambling market, estimated about $1.6 billion, with roughly half from digital sports betting. Growth drivers like high smartphone penetration and rising demand for real-time sports wagering make it attractive. Importantly, a proposed South African remote gambling bill could soon legalize online casino games as well, opening the door to further revenue. Chairman Tanco has described South Africa as not just the largest online gaming market in Africa, but a gateway to the continent's digital future. This move also helps de-risk the business. By building presence beyond the Philippines, DigiPlus can diversify in case domestic growth slows or is regulated. City of Dreams Manila acquisition. In mid-2025, a flurry of media reports speculated that DigiPlus might acquire City of Dreams Manila, a large integrated resort currently majority-owned by Melco Resorts. Bell Corporation is the local partner. If true, this would be a dramatic shift, moving from purely online games into owning a physical casino resort. Analysts say such an acquisition could have big strategic benefits. DigiPlus as a digital operator pays about 30% tax on gaming, whereas integrated casino licenses enjoy lower effective taxes, around 21%. So owning a resort could cut its tax rate substantially. It would also diversify revenues beyond online bets, a brick-and-mortar resort with hotels and entertainment, potentially offsetting volatility in online gaming. The resort itself represents a massive investment, around $2.4 billion to build, and is a key asset in Melco's Philippines business. Melco is reportedly seeking buyers as part of an asset-light shift. However, it's important to stress that as of now, no deal is finalized. DigiPlus explicitly filed a disclosure saying it is only evaluating potential acquisitions and that no definitive agreements or plans have been finalized. In other words, the City of Dreams story remains speculative. If it were to happen, it could be a major catalyst, but it also carries risks, huge debt, and integration complexities. At present, we flag this as a possible upside event to watch, not a current fact. DigiPlus's valuation has become a focal point for analysts and investors. Prior to the recent sell-off, its market capitalization briefly exceeded 120 billion pesos. Even after the sell-off, it's around 88 to 90 billion pesos as of mid-2025. For context, this is roughly twice the market cap of Bloomberry Resorts, the leading Philippine casino operator, owner of Solaire. Despite this, DigiPlus's forward PE ratio is far lower than Bloomberry's. According to financial data, DigiPlus trades at only about 7 to 8 times forward earnings, whereas Bloomberry trades around 80 to 90 times. In other words, DigiPlus looks cheap by PE standards. The Simply Wall Street analysis shows DigiPlus with a forward PE around 7.3 times, market cap of 114 billion pesos, versus Bloomberry at 88.6 times, 47 billion pesos market cap. DigiPlus's inclusion in the PSE's main index in August 2025, replacing Bloomberry, reflects its larger size and liquidity. Put simply, Bloomberry is valued for its physical resort assets and future projects, like Solar North, but has faced profit swings and is seen as expensive on a PE basis. DigiPlus, by contrast, is valued primarily on growth and scale of its online platforms and currently looks much cheaper per unit of earnings. Many analysts consider Bloomberry a peer because both are in the gaming space, but their businesses differ: integrated resorts versus digital gaming. Still, DigiPlus's stock had become quite high relative to most Philippine stocks, which likely contributed to the steep correction once sentiment turned. Until mid-2025, investor sentiment on DigiPlus was overwhelmingly bullish, riding the hype of its growth. But in June-July 2025, sentiment flipped to panic. A wave of legislative proposals and even executive talks about restricting or banning online gambling sparked a broad sell-off in gaming stocks. In early July, an Insider PH headline aptly called it, "Gaming Frenzy Turns to Panic as Plus plunged to its 30% daily limit." On July 3rd, for example, the stock dropped as much as 30% intraday to about 25 pesos before a small rebound late in the day. By mid-July, shares had lost about 70% from their June peak, around 65 pesos, erasing over 200 billion pesos in value. By July 17th, DigiPlus traded around 19.50 pesos. As of late September 2025, it recovered into the low 20s of pesos. News flow fueled the mood. Reports of Senate and House bills to ban online gaming, such as banning e-wallet betting, raising age limits, spooked the market. Analysts warned that DigiPlus was the leading digital operator, and thus especially vulnerable to such risks. The Philippine president had previously banned Philippine offshore gaming operators, so investors worried he might similarly target online gambling. Insider commentary noted that without clear regulatory direction, many investors would rather sell now and ask questions later. One broker's head of research described the panic drop as a classic capitulation that might signal a near-term bottom. In response, DigiPlus battled back to stabilize sentiment. In early July 2025, it announced a huge 6 billion pesos share buyback program, funded by its strong cash flows. It also revealed that it had already repurchased around 3 million shares on the open market, 84 million pesos worth, in mid-July to support the price. These moves signaled management's confidence in the business. By late July and August, the stock had retraced some losses, especially after President Marcos' State of the Nation address did not explicitly ban online gaming, easing fears. Indeed, in August, DigiPlus's market cap still stood around 88 billion pesos, nearly twice Bloomberry's. Investor perception now is cautious but mixed. Many retail traders remain on edge about regulatory risks. Professional analysts advise waiting for clarity on proposed laws. Others note that on fundamentals, DigiPlus is still growing rapidly and trades at a reasonable valuation, so the sell-off may have overshot. A late September rally on City of Dreams acquisition rumors. Shares briefly jumped 6.3% to 23.65 pesos, suggests bargain hunters are watching closely. Inclusion in the PSE index, effective August 2025, also means index funds will buy Plus, providing support. In summary, sentiment turned from euphoria to fear, and now, as of Q3 2025, is cautiously optimistic. Investors know the story is still compelling if the regulatory storm passes. Looking ahead, the biggest risk for DigiPlus is clearly regulatory and political uncertainty in the Philippines. Lawmakers are considering bills to restrict or ban online gambling outright. A ban, as DigiPlus and analysts have warned, could be devastating. Tanco himself noted it would imperil more than 3,000 direct DigiPlus employees and an estimated 50,000 jobs in the sector. He argued that prohibition would simply push players to illegal, unregulated sites. In practice, even proposals like banning e-wallet usage or imposing limits could crimp DigiPlus's growth or profitability. A local brokerage head warned that if stricter rules significantly dampen player participation, DigiPlus's revenues could fall sharply. Beyond government policy, other challenges include execution in new markets. Launching in Brazil and South Africa is exciting but not guaranteed. These jurisdictions have their own licensing processes, taxes, and competition. For example, obtaining Brazilian authorizations and setting up local operations will take time and capital. Exchange rate volatility, peso versus Brazilian real and South African rand, could also affect returns. Acquisition risk. If DigiPlus pursues a City of Dreams purchase that involves huge investment and integration risk. The resort project took around $2.4 billion to build and has been loss-making for Melco. Turning it around would be a major undertaking. Market expectations. DigiPlus's PE is low now, but expectations are high. Any slowdown in growth, market saturation, or new competition could pressure the stock. Other gaming firms or foreign entrants might compete in Brazil and Africa. Dependency on PAGCOR and local regulators. While DigiPlus has shifted its focus, it still relies on its Philippine license framework. Any unfavorable rule changes, like tightening digital betting limits, remain a constant overhang. Social and reputational factors. Increased scrutiny on gambling means the company must keep up its responsible gaming commitments and public relations. It has taken steps like joining the PlaySafe Alliance to counter negative perceptions. Overall, policy risk tops the list. Any investor in Plus must watch Philippine political developments closely. Despite the challenges, there are several reasons to be optimistic about DigiPlus's long-term prospects. Brazil launch. If all goes well, commencing operations in Brazil, with its enormous population, could be a multi-year revenue driver. Being one of the first movers of a Philippine firm into Brazil's new gaming market is a big advantage. Africa expansion. The South Africa initiative, and potentially other African countries later, further diversifies growth opportunities. Success in South Africa could open doors to larger African markets. City of Dreams. While not confirmed, a deal for City of Dreams Manila would massively change the business profile, adding stable resort income and tax breaks. Even just the possibility of this expansion has grabbed attention. PSE Index inclusion. Being added to the PSEI, Philippine Stock Index, in August 2025 will bring in index funds and broaden the shareholder base. Historically, inclusion can prop up share prices. Robust earnings momentum. The company's growth continues. First half 2025 results were very strong. Continued double-digit top-line growth and profit margins would validate a higher valuation. Share buyback. The 6 billion pesos repurchase plan can support the stock by reducing float and signaling confidence. As long as it remains active, it provides a floor. Policy outcome. If regulators settle on smart regulation, such as licensing requirements, responsible gaming measures, rather than outright bans, DigiPlus stands to benefit as a legal operator. Tanco's emphasis on responsible gaming initiatives suggests the company aims to be aligned with government goals. Clarity or leniency on legislation could trigger a relief rally. Industry trends. Finally, global trends favor online gambling growth, mobile adoption, rising disposable incomes, etc. DigiPlus is positioned at the intersection of these trends. In summary, catalysts include the successful rollouts in Brazil and South Africa, any favorable news on City of Dreams, and plain old continued earnings growth. Retail investors should monitor these developments. Each positive milestone could kickstart a new leg up in the stock. DigiPlus Interactive is a fascinating case of a digital native gaming stock that shot to the stars and then hit turbulence. Its company background as a pioneer of online gambling in the Philippines explains the earlier rally. Its financial performance has been stellar, with huge revenue and profit growth. The major sell-off in mid-2025 was largely due to regulatory fears, not business fundamentals, as the government mulled tighter controls. The company's swift share buybacks and recent international expansion news have helped soothe markets. Looking ahead, DigiPlus carries both upside and risk. On one hand, it's leading the charge into new markets, Brazil, Africa, with a strong track record. On the other, it still has to navigate an uncertain policy environment at home. For retail investors, the key is to weigh the growth potential against the legislative risks. If Philippine authorities allow this industry to flourish under regulation, DigiPlus could reclaim much of its lost gains. But if severe restrictions are enacted, the outlook would dim significantly. In essence, DigiPlus remains a high-growth story, trading at a modest PE, around 7 to 8 times. It is worth watching closely. Catalysts abound, market launches, possible M&A, but so do warning signs. For those following the Philippine gaming sector, Plus exemplifies the high-risk, high-reward trade. It has delivered huge returns in the past, but investors need to stay alert to shifting winds, especially from Manila. If you found this video helpful, don't forget to like, share, and subscribe so we can keep bringing you more deep dives into the Philippine stock market.